Kunj, hi, good morning. It's been a stellar March rally so far, but do you think after the heady rush of 3.5% just last week, the markets are in for some pause or consolidation?
Well, of course, these questions are always difficult to find answers to. But still, if I were to put my neck on the chopping block, I don't think we should hope for or wait for a correction, or there can be a correction. In fact, even if we look at the last week's trading pattern, I think on Tuesday or Wednesday, market did try to show some correction. But eventually it was hardly a day's correction, or not even correction, a consolidation or intraday correction, and then again last two trading days of the week we saw sharp rally. So let's keep in mind that we are coming out of a non-participation period, and when I say non-participation, let me try to be more specific. Non-participation by global investors over the last, let's say, 8-9 months or so, and more specifically from October till March, about 5 months of the market. And that non-participation is what is leading to the participation coming in, especially by global investors. Domestic participation, thankfully and maturedly, we have continued to see. So I'm sure those investors must be sitting pretty and feeling happy about it. Repeatedly, what all of you in media and we all try to tell them, that please don't get scared from the market when there's a correction. Actually, that's the time to come in. So as I said, they must be feeling happy and sitting pretty on it. Coming back, because of this non-participation for the last few months, I don't think we can expect a significant surprise, and that is what market also does. In fact, all the people probably have got left out in the market are feeling that okay, there will be a correction, and market always has this habit of doing exactly reverse of what a larger consensus expectation is. So as I said, largely because of the non-participation over the last few months, I don't think we will have a non-participation period in the near future. Of course, eventually going forward, things too will keep changing.
Sandeep, in this leg of the rally, banks have participated, but a lot of mid-cap cyclical names have not participated. Construction has hardly participated. L&T is jumping where it was jumping, where it has been jumping for a long time. Do you think if the market strength stays here, one should now start moving out of banks and maybe start looking at industrials and cyclicals? Because if the credit offtake picks up and if demand comes back, and if indeed if we are in a new fundamental cycle, then early industrials and early cyclicals will also make money.
Yeah, that's true, and that will happen. So what will also, because typically in the first 2-3 years, once a new government comes in, there's a lot of focus on these things, and many of these companies, if you see, have got huge order books, so and the execution cycle is also on. And if we are going to be in a phase which looks likely now in terms of global liquidity actually looking benign, rather than 4-5 months back where there was an expectation that global liquidity could actually tighten because Fed was tightening, ECB could start tightening, BOG could remove its easing bias, etc. So none of those things have happened. In fact, things have turned around. So I think global domestic cyclicals will start coming back. Among large caps, clearly L&T is one of the most undervalued stocks today, despite strong performance operationally over the last few quarters. Very strong order acquisition even in this quarter, where they had actually guided for some sort of slowdown, which doesn't seem to have happened. So I think among the larger companies, L&T will obviously benefit, and among the construction names, there are a lot of companies which will do well, and many smaller capital good companies I think also should start coming back going forward.
Kunj, the currency as well, that's a big talking point. On a roll, we've outperformed the other emerging market currencies. The last 1 month has been particularly very impressive for the rupee. Let's talk about the impact that it's going to have on, the export sectors, IT, pharma and the like. What exactly do you believe will be the impact?
So the impact obviously will be, as you rightly said, we have seen the Indian rupee appreciating over the last month. Again, going back to the previous discussion, one of the reasons is that increased inflows from the global investors that we have had into the country. Also the dollar weakening because of the continued uncertainty over their trade deal negotiations with China and few other factors. Let's also keep in mind here that oil has stabilized. So while it's not going down anymore, it's not going up also. So all those things have been clearly positive for the Indian currency. In terms of impact, as a result, we have seen IT sector already relatively not participated in the recent rally that we have had. Now, not only that the Indian currency appreciation is the reason also is that it's a defensive sector, it's a low beta sector. And in any sharp rise, or for that matter sharp fall also in the market, a low beta or a defensive sector wouldn't participate either way. So that has been an impact clearly on the IT sector. Going forward, the expectation of their growth rates being in the range of, on an annualized basis, 10 to 12% is something that will keep guiding the valuations and the stock price performance, which will be of course backed by the company performance. The rupee impact will sooner or later tend to eventually normalize out. Now, pharma sector, which is another export oriented sector, is a little bit of underdog, if I may say. In fact, if we go back when the rupee was depreciating few months ago and we saw IT sector outperforming sharply, we did not see any participation coming in from the pharma at that point of time. And now, because the rupee is appreciating, the underperformance continues. So it's a double whammy for the pharma. It did not participate when the rupee was depreciating. It is not, or rather it is continuing to go down when rupee is depreciating. So in case of pharma, the reasons are beyond the currency. And the reasons are known to all of us. Continue to be challenges on the US growth front. There continue to be challenges of the US FDA issues. Of course, there continue to be the challenges on a selective basis in the domestic market growth as well. So I don't think pharma sector is going to either way get affected. Its underperformance has been there, will probably continue to be there. It's a difficult sector to understand. There are too many variables. But IT, after the recent underperformance, if at all, as I said, partly because of the sharp rise in the market and having been a low beta sector, not participated, and also rupee appreciation, but eventually it will start to participate again because the growth expectations are reasonably decent.
Which I want to get in both Sandeep and then Kunal on this is Sterlite Tech. In a rising market, Sterlite Tech has gone against the grain. The data in my hand is clearly indicating that there is technical weakness and there is definitely an element of large leverage selling. Sandeep, fundamentally, is there anything wrong with Sterlite Tech? And the reason why I'm asking you Sterlite Tech is because you own this stock.
Yeah, I think the reason for the selling has been more fundamental rather than the leveraged stock selling, because none of the leveraged stocks have actually got sold. I think it's more to do with what's happening in the global fiber market, where prices have come off. Now, Sterlite Technologies over the last few years has continuously maintained, when spot prices are going up, a lot of analysts used to be very positive that prices at which Sterlite sells will go up, but they never got up because the management always maintained that we have a pricing strategy which is more on a long term with our clients. So similarly, now spot prices have cracked and they are still maintaining that we will not be impacted much, and they are still guiding for significant profit growth over the next year and going forward. However, from an investor standpoint, we need to be a bit cautious at this stage because there will definitely be in some impact on their earnings trajectory. Now, whether it will be very drastic or whether it will be muted, because they have a significant order book of around 10,000 crores on various other diversifications which they do, which could hold them steady in this phase where the prices are down. That's something which we need to watch out for. So what the outlook was 4-5 months back, from there obviously it's deteriorated, and to that extent we've seen some de-rating in the stock.
We have to talk about Embassy Office Parks before we let you go. The issue opens today. Have you taken a look at it? Is it anything of value that may interest you?
No, not really.
Okay, fair point. Let you go on that note, Sandeep. Thanks much for taking the time out. Kunj, have you taken a look at Embassy Office Parks IPO?
Not a detailed look, but whatever little look I had on a cursory basis, it seems to be offering very attractive yield. And let's keep in mind that after the sharp outperformance of 2017 in the real estate stocks, we have seen the underperformance in 18 and in the first 3 months of 19. At the same time, from a regulatory standpoint and from the government support point of view, if we look at the recent budget, there have been quite a number of supportive measures announced by the government towards the real estate sector. So I think on a selective basis, if one has that asset allocation and wants within that a real estate allocation and within that an allocation of for the REIT, although there have been 2 REITs earlier, but they are now from the non-real estate space, and the experience of investor hasn't been that great, although the distribution from those REITs continue. So if we take an interpretation out of there, I think a limited allocation for an investor is probably not harmful.
All right, let's just take a look at the pre-open rates as well. It was in India. Meantime, Kunj, curious about what you're making of, JET, because that resolution only seems to be getting delayed. There was that open letter that was written by Naresh Goyal, and yet again we understand that the rescue deal has flown into an air pocket. What does one do with Jet Airways from a shareholder standpoint? Forget flying in the airline.
Yeah, so I think it's a godsend opportunity for the high risk traders. All the news flows, one day positive, second day negative, third day negative, fourth day again positive, and like that is offering a very good trading opportunity. So all those, as I said, high risk traders who know how to trade with strict stop loss on both sides, long as well as short, I'm presuming must be making good amount of money. For the medium term and long term fundamentally oriented financial investors, the whole airline space as a whole has never made any investment sense, and in the current context it applies all the more so for the Jet, because there is complete lack of clarity. As you yourself mentioned, the news flow is so volatile and so changing almost on a daily basis, if I may add on an hourly basis also. Sometimes suddenly banks are there, sometimes Mr. Goyal is resigning, sometimes he's continuing, sometimes his son is coming in. Financially looks like with the way the cancellation of the flights have happened, the results for the current quarter March are going to be really bad for the company. So for a medium and long term financial investor, obviously it doesn't make sense. For traders, continues to be a delight.
68.9. Ladies and gentlemen, rupee is at 68.9. The recent low for rupee was well below 70, 72.4, right Kunal? Rupee's low 72.4.
74 odd. I'll still check that.
More than 73. So I don't have the numbers. I mean, I'm just telling you that how the trajectory of rupee has been. And if you have the 1 year chart on the rupee, it's just been a dramatic comeback. It's just been a dramatic comeback. Strength in rupee is good news for Indian macro, but strength in rupee is not like fantastic news if you are a metal, if you are in a metal stock, if you are in an IT stock, surely if you are in a pharma stock, and surely if you are in the textile business. So strength in rupee needs to be taken in context with the fact that what will happen to the underlying earnings, and that for me I think is the biggest challenge. Every time we think that earnings recovery is around the corner, something changes somewhere. For the quarter gone by, it was NBFC, IL&FS crisis, and then movement in crude. For this quarter, it really could be strength in rupee, which will automatically change the way how the dynamics would move. The problem is that after a sharp depreciation or sharp appreciation in an asset class, things are not looking stable. Crude fell first and then recovered. Rupee fell first and now it recovers. So we're getting hit, I guess, in both the aspects. Imagine Reliance. I mean, they are a large exporter. And what will happen to the GRMs? What will happen to their refining business, which is largely centered around the export wheel? I don't have the numbers to point it out, but these are factors which really need to be considered in terms of analyzing the impact of rupee. For IT company, we know that if rupee appreciates by 1%, the net margin impact could be anywhere between 0.3% to 0.5% and higher for larger companies. So what was like a natural tailwind for IT has now become a large headwind, at least for IT. But what else could move your portfolio? It's at 9 of, we are at 9 of 5, but Abbas got 5 stocks ready, which could impact your portfolio today.
Morning, Kunj. Let's recap some of these. We've been discussing some major news flow this morning, and these are the stocks that are going to be on our radar. First up, on the back of the news, L&T is close to making a hostile bid for Mindtree, should be closed by later today. That's going to keep those stocks in the news, as well as CCD, as you were pointing out. So that's the big buzz this morning. Airtel is keen to merge its digital ops with Dish TV. This would create quite a mammoth in the space and would take on the might of Jio. So that's another interesting development. All eyes there as well. And interestingly, Airtel's been actually making a bit of a comeback on the charts too, so keep an eye on that one. Jet lenders are going to tell Etihad to either infuse funds or exit. They're really on the brink right now, so they need some clarity. They've also got the pilots union really building up now against them and calling out for some kind of action. Two Lupin units are facing US FDA action. We've been talking about those OAIs as well. The management has been trying to reassure investors that this is something that will easily be sorted out. But let's just see how things shape up there as well. And RBI has approved the Bandhan Group merger, so those stocks will be on focus on the back of that as well.
All right, thanks very much for highlighting all of those stocks to keep on your radar this morning. Well, with the indications of the pre-open rates are anything to go by, it's going to be a fairly decent start for our own markets this morning. Let's just take a look at that block deal. Well, there's been one in Bharti Infratel. 16 crore shares have traded in a pre-market block deal. That's Bharti Infratel, so that's going to be another stock to keep on the radar. Meantime, Kunj, curious as to where you're placing your bets within the auto space, given the kind of slowdown that we've seen. Is there going to be more negative surprises? How are you looking at, the overall macroeconomic setup for the auto space?
Yeah, so we are in a challenging position as far as investment decision on auto is concerned. Even today there is a news that Maruti has cut its production, which obviously looks like has been governed by the numbers of the last few months and the expected degrowth or a slow growth that they would have seen in the current month and must be expecting. So obviously the March quarter numbers will be weak. Now going forward, we will have elections, as we all know, April, May, and that's a period wherein especially passenger vehicles and commercial vehicle sales could take a knock because the activity, larger part, would be busy into other activities than specifically the focus on commercial activities. Now that also puts us in a position wherein the June quarter numbers could be weak. But within this period, somewhere market which has already seen a rally, if it again takes a correction closer to the elections, depending on the news flow or post that, would offer some better entry points. Now, keeping in mind that the growth should eventually come back for the December quarter and hopefully for the March quarter after that, irrespective of election outcome, whichever government comes, the show has to go on. The economy has to move on. People have to start consuming. Businesses have to start investing and carry on the business activity as usual. So I do see September and December quarter giving growth back to the sector. And in between the next 2-3 months, we will get a valuation entry point depending on market volatility. That will be the time to take a contrarian bet on this sector. As I said, the numbers won't be there for at least next 2 quarters. So it could be a painful holding. It could be one has to be ready to see the depreciation in the prices of the stocks that one is holding on. But it's an economy related sector, and I don't think India's economy is going to go anywhere. So one has to take a call, but with a slightly medium term view.
Yeah, show must go on, and economy doesn't halt, barring some of the hiccups here and there, and we would see that hiccup probably in next 1 month or so. But then auto space react too much to their monthly numbers, and those have not been encouraging. Very quickly, 2 stocks from F&O basket, and first one is Nestle. Negative observations over here. We are seeing that most of the FMCG names are adding short positions, be it HUL, ITC, or case in point Nestle, which we are going to discuss in detail. So there has been rise in open interest with fall in price. Now again, stock managed to close below its 200 DMA, and it's not just that moving average, but also the volumes have been very high. Support is at 10,000 levels, which is around 700-800 points from current levels. So we are talking about meaningful downside from current levels. Now brace yourself. Reliance it's a negative observation after fabulous rally. Kunj was pointing out how GRMs would be under pressure, rising rupee. But keeping that everything aside, there is some formation of fresh short positions in Reliance. We are seeing some exhaustion happening over there. Cash volumes are highest in 2 months, and that too on a day when market went up by 83 points. Reliance went down 1.5%, and formation of short positions 1360, and it's not very far away from current levels. That is acting as a strong resistance at this point of time.
3.5 minutes to go, and I think for me, I think it's rupee, IT, banks. These are the central themes from a market standpoint. But let's not lose sight of what metals would do. Strength in rupee is actually bad news for metals. Let's be very clear about it. Kunj Bansal, give me a sense of a stock which you would say, look, I would buy this stock irrespective of the election verdict, and I'm a buyer today, and I will be a buyer tomorrow, and I was a buyer yesterday. And it cannot be HDFC Bank.
Yeah, so not necessarily. Okay. So not necessarily that I was or I am a buyer. Of course, I could be as well. So disclosures upfront. But keeping that in mind, I'll take one large cap and one mid cap. And as you said, not HDFC Bank, but staying within the corporate private sector bank. ICICI Bank is one stock which, let's say, was looking attractive earlier also, despite rise. And let's keep in mind that there has been a more than 10% rise in the last 1 week or so. Despite that, it looks good. I could continue to be liking it till another next 10% rise or so. So that's one stock. The other stock which I'll slightly move over to the mid cap space is a stock called Crompton Consumers. So that's one stock which largely in terms of share price performance has been a non-participant for almost last 2 years. Of course, in between it has gone up, it has come down and gone up and come down again. The numbers were weak, the margins were weak last 1 or 2 quarters, which showed some improvement last quarter. Should see improvement going forward. So that's another stock to answer your question.
Okay, Kunj, great to have you on the show. Just 2 minutes left to go before we ring the opening bell for this Monday morning. And I just want to recap the top 5 factors that you may want to keep on your radar as we step into trade. Nifty has clocked its